Hello, everybody. Welcome to this red day on the stock market. Trying to dissect it all here, but looks like we'll end up about 3.5 percentage points down on the NASDAQ, and that's for the stocks that I follow. I mostly follow the NASDAQ index as opposed to the S&P, but if you're looking at the S&P today, you're down minus 2.35% as of now, with just a couple minutes left in closing, before closing rather. And I think the story's been the same almost every day, past 3 days or so, certainly from the standpoint of growth stocks, getting that froth chopped off of the top of them. And we've even seen some of the stocks that I would argue were closer to a real valuation, like Amazon and Google for that matter, those are getting chopped too. Not nearly at the same pace as the growth stocks, but there's some opportunities in here. I'm sure that you're probably asking your friends and watching other people to figure out, what are they doing in this circumstance. And for me, right now, I'm holding tight. I buy a little onesie twosie shares here and there on days like this, but I'm also relatively, I guess, how's the way to put it? I don't know that this is over, this sell-off right now, and I think that it'll be a slow bleed for a little bit, just because of a lot of the things that I've mentioned on this channel before, that I think the focus on the stock market that we've had here during the pandemic is also something that I'm trying to make sure that this, sorry, I just got a notice. Visibility, oopsie. All right, so as usual, I missed the setting for the public view, but I just turned that on, so hopefully that will catch up. I was on my own little intro soliloquy there, but the bottom line is for me that I am holding off to the side, buying some shares here and there as I see the price dips, and trying to balance against my cost basis best that I can, and there's plenty of opportunity for that, particularly with a lot of my growth stocks. Enphase, Square is in there as one that's being chopped up pretty good. I also saw Palantir is now under $25, unless it gets a little jump here before the close. Let's take a look here. Yeah, so for me, on my side, it's Palantir, under 24 now. Unity Software, I bought in the 120s. That's about 105. Enphase, cost basis for me, like 190. That's down to 167. And I think those are the only ones that I'm negative on. And then today we have Rocket. So any minute now, Rocket should be reporting. And that's something that I'm going to be super interested in. In fact, I'm trying to refresh. I don't know how quickly they're going to post it, since it's not that big of a company. Let's see. They haven't posted it yet, at least not on their website. So we'll be looking for Rocket. But bottom line on the stock market so-called crash, don't be surprised if it bleeds out. And a lot of that, in my opinion, is because that we're starting to get more distraction right now, not necessarily negative distraction. I made a video a week or so ago called the paper hands crash, if you will. And the concept of that was simple, and that is there's going to be more opportunity for folks to spend their money and get out of the house and go do things. And that's when there's more opportunities like that, then all of a sudden you have a situation where the focus isn't on the stock market, People are out of their house, they're in public places, and when you don't have money coming in and you don't have massive buying activity, you either have flatness, which we could see, or if people sell to take some of their profits and go spend it on a vacation or something for their home, then all of a sudden you have the negative effect, right? And that would be the sell-off or a portions of a sell-off. Then that could be what we're seeing starting already here heading into March 1st. So remains to be seen how that goes. But we just stand tight, and I don't particularly see any reason why this kind of activity wouldn't continue for a few weeks. I don't see any big catalysts that would reverse this trend. In fact, if the long-term interest rates continue to be a focus of the television shows and everything that are, they have their eyes on that 10-year yield. If they don't get off of that thing, it's probably just going to go up a little bit at a time. And when that happens, some people freak out. So, take that for what it's worth. All right, let me do a refresh here to see if our friends at Rocket have posted anything. Not yet on the website. You do have an earnings call going on right now that I'm not listening to. I usually, if I listen to those at all, I listen to them in the background, sort of like a podcast. Checking a couple sources here to see if we have an update. Not yet. So any minute on Rocket. But while we're waiting for some Rocket news, I wanted to talk a little bit about Square. Square's earnings, which were, relatively good. I didn't like the earnings report. I didn't like the shareholder letter, the way it was displayed, and I thought that there was a lot of math in there that just didn't come out and say things in a way that I'm used to reading on an earnings report. And I don't think that it was very straightforward. It doesn't mean that they're lying or anything. I just thought everything was buried. It was buried in that shareholder letter, and you had to go through page after page and compare year-over-year data. The EPS they turned into net income per share, and it just kind of rubbed me the wrong way. And while I am relatively bullish for the long term on Bitcoin, I thought that there was perhaps too much of a focus on that. Cash App is obviously the catalyst, I think, for most of us who are invested in Square. But Cash App can be a lot of things, and it's been a crypto investing platform over the past year with some success. However, I thought that it was stressed too much. I thought that the crypto trading platform, as well as Square adding Bitcoin to their balance sheet, was too much of the focus of the call. I look at that as an outside play or a hedge against another world, and I did not see that. I was just concerned that it took up too much of the earnings call. I was much more interested to hear about developments in the Cash App, the fact that they got their banking charter, I don't know if it was 3 or 4 months ago. Those were the kinds of things I was interested in. And I was also interested in hearing more about the merchant program and what kind of signs of life they were seeing over Q4. They actually did better when you consider that they are they're much more focused on small business. I thought their Q4 merchant program did a lot better than, frankly, I thought it would, just because of all the closures that we had in America. And there wasn't a lot of talk about the future of that. And so, whatever, color me disappointed in Square for that particular earnings call. On the bright side, for Square investors and those who have not bought in recently. You can now get in after hours. It's up a little bit, but 227. So my cost basis, and I'm late to the party, right? I've been PayPal strong. I was always a little averse to Square, but I finally bought in this year, and I think I'm at 214. So right now you're at 228. So that's an opportunity. Technically, fundamentally though, you're way above the skis on Square in terms of evaluation. So this is a momentum stock, and by all intents and purposes, it is expensive. All right, I am trying to see here if there is any comments. I don't see much on the live chat. I don't see anything on live chat today, so hopefully that's working. Let me just make sure that it is enabled. And it is. So if you have any questions, feel free to save those there. Apologies if you got here and this was on a private stream. That was just me figuring out the settings. Okay, one more quick look for Rocket news. I'm very excited for Rocket earnings, at least for them to say something. All right, here we go, guys. I will transition. This is... Whoa. This is off of Yahoo press release. Let's go through it together. Increased adjusted revenue to $4.8 billion, up triple digits year over year. Grew net income up 200% year over year. Adjusted net income $2.3 billion, which is a lot. So this is a fantastic first look here. These quotes can be hit or miss because they come from the company themselves. But Rocket Company's record-breaking fourth quarter and full year 2020 demonstrate sheer power, blah, blah, blah. In the midst of the pandemic, we drove growth in every segment while never losing focus on the needs of our team members, blah, blah, blah. I'm excited to announce that the board of directors has approved a significant special dividend of $1.11 per share. We are delighted to be able to share our success. Well, that's a nice bonus of $1.11 per share. As more and more consumers shift their preferences towards digital, provide them with innovative technology, blah, blah, blah. All right, let's scroll down here to the numbers. And let's see here. We want to be right here, or I do, actually, GAAP diluted EPS, Q4 $1.09. Let's see if they do a full year. Here we go, guys. This is what I've been waiting for. $1.76 GAAP EPS. So Rocket's P ratio right now, and let me do my math off to the side. You have $20 a share is about what it settled at today, divided by $1.76. You have a P ratio of 11, okay? For Rocket right now, you have a P ratio of 11, which is obviously great. So everyone who's been doubting Rocket, I can understand your frustration. I've been there as well. However, from a stock valuation standpoint, this is a very, very cheap stock, certainly in terms of what we have seen out of the market here recently. So great news on the Rocket front. And let me see if we have any other analysis on that. 1 second here while I type this in. Yep. All right, pretty much just people reposting the press release right now, so we don't need to spend any more time on that. What is going to be interesting for Rocket, in case you're curious about what's next, let me see if they have a note about the future. So 2020, I think everybody knew that was going to be a good year. The most important thing we're looking for is 2021 general guidance. Let me see if they're doing that. I'm just keep first quarter 2021 outlook. Closed loan volume between about 100 billion, increase of 99% versus first quarter of 2020. And it looks like they're just doing the first quarter like so many other people, which is fine. This is one of the holes in our pandemic earnings reporting, right? Is most companies are not going much further than a quarter out. In fact, now that's new. If you went back 6 to 8 months ago in the heat of the pandemic, companies wouldn't even comment on the upcoming quarter, which is absurd. So that's why you see so many companies that have beaten earnings, right? Because it's just analysts, it's just guys like me, or more professionally than me, who are just guessing at EPS numbers. So we should get out of that world very soon here in 2021. I'm guessing that by the end of the second quarter, assuming the world is opened again, you are going to have more companies try to project a fiscal year as opposed to just one quarter at a time. All right. So it does look like at the end of the day, let me show you something interesting here for QQQ. All right, so we have this dip, right, or this event, or whatever you want to call it. And I think what's important to keep in mind, let's go through a 1-year chart, is where we are on this dip / correction, and why it could be more later. Okay, so we're here at 313 after hours. January 25th, you're at 314. All right, so you're flat basically to a month ago. And as recently as December 28th, you're about flat. You go out here to October 26th, Halloween time, which was our last dip event heading into the presidential election. That was at 269. Okay, so this isn't like some massive event that that we're pushing back. We're not pushing very hard down. So if you're nervous today on the stock market going up and down, if this made you nervous this week, then you need to either prepare mentally for some more. It doesn't mean it's going to be epic, death and destruction, but you need to have a plan for how you're going to handle the potential for other downturns to take place. So I'm just calling that out, not to scare you or be anything. I'm super positive about the stock market. I'm super positive about 2021. I am super positive about the economy catching up to the stock market. So let's be clear. But I think that when I read some things online, there's a lot of folks who think that this is like a crash. This isn't a crash, guys. This is barely, I don't know if I would even call it a correction. So that's what's a little scary right now. If you are the type of person who is getting nervous about now, you need to set yourself up mentally for what you're going to do in the future if the things continue to go down. Okay. Coming up on here. All right, feel free to post questions in the chat. I haven't seen any questions yet today. We usually have a couple. I like to do the questions. So if you have something burning in your brain, then please let me know. I just double checked the settings again to make sure chat was working, because originally this came in as a private live stream, but it is not private. So no restrictions, cool. Just going through the settings one more time. Nope. Okay. All right, so what else is going on today from the finance perspective? Of course, the meme stocks are back on fire. Last I saw, let's check in on GameStop. You were at 108 today. That doesn't end up to be much, the way I'm looking at it, that's not much different than I've seen the past couple days. Here's a 5-day chart. I do not play in these, by the way, in case you're curious or you haven't been here before. So here's your 109, and that lands right as the same as Wednesday. If anything, it's down a little bit. Last week, you were in the 44 range, so it has doubled up. Again, just be careful, especially in a down market. I would say that there's more risk to GameStop continuing to go down, not necessarily because there aren't people buying the stock, but just in this volatility, you know, there more people bail, man. So all the guys that are trying to rally the troops on GameStop, I believe that they are probably investing, but you don't have that upward stream right now in the stock market, right? The overall market is trending downward, so you're fighting against the stream, and that can be a difficult situation if you're trying to boost a stock. Same goes for AMC. I didn't see whoever else was on there. Let me check the biggest gainers for the day. Trending tickers, costs, KOSS Corporation. Not by much though. That's up double digits, 16.76%, but not a huge one. By volume, today you're looking at AMC, Sundial, Tesoro Enterprises, Palantir, and GameStop. But of those names, it's only GameStop who's posted any sort of wins across the board. Looking at gainers for the day, on my screen, you got Workhorse plus 24%. The rest of them are penny plays. And then on the loser side of people that I follow, Redfin down to $73. Those real estate plays are very interesting because I found them to be wildly overvalued. I love Zillow, and but I do not own Zillow. If this market keeps up trending in the right direction, I would perhaps buy some shares of Zillow. But I'm looking at the chart right now, and for me, man, it would probably have to be under $100 at this point. I'm looking at October 26th, and you're at $88. This company does not have a positive EPS yet. They're essentially not profitable. They are supposed to hit profitability this year, and I'm looking at the analyst projections. You got, if they're lucky, they're going to land at about $1 EPS by the end of 2021. So at $99, that's a 99 PE. It's trading at 150 right now. So that's a 150 forward PE if everything goes right in the year. And there's, there's more expensive stocks than that, but frankly, as this market comes down, you're going to see way more intriguing opportunities if you start to talk about what's going on in FANG stocks falling, what will likely happen in the chip sector with prices going down there. So I don't know. It's tough. It's tough to prioritize Zillow if you're a person like me, just because of where the price is at. So anyway, that's my 2 cents on those. Checking for other headlines here. We've got NASDAQ posts worst session since October as tech rout deepens. So again, that's since October, right? So that's late October, just like I showed you on the chart a second ago. This is not a historic correction by any stretch of the imagination. So, hold on to your hats. I'm not anticipating a historic correction, but I'm just saying that there is certainly more room to run in the downside. Airbnb, let's take a look at this one. Looks like Airbnb came out with their earnings, blows past revenue expectations, shares surge. I'm going to skip to the bottom. Revenue 859 versus 739. Adjusted loss 21 million versus 132.8. I'm guessing million. The majority of analysts who cover the stock have a hold rating, while 13 recommend it as a buy. Among those who are bullish, upped his price target to 240. He estimates revenue will actually come in closer to 937 million. So there's something in there. I have an eye on Airbnb too, but this is another one. Let me see if I can type it out. Got another one here that's going to be a little pricey. 1 month chart, not as bad as it has been, 217. If we go 6 months, this hasn't been out very long, December 10th. You could have got in off the gun at 124, jumped to 216. You're at 182. It is up after the earnings in the background, so that's a positive. I don't know. It's hard for me because we don't even have a full year of reporting yet. So without me being able to look back too much into the history of this company and try to gauge, what's COVID travel going to do, it's a little bit harder to analyze. Now, you could close your eyes and just buy it, right? And hey, listen, that's worked for a lot of stocks this year. But for me, I just like to be able to tie it a little bit more to some fundamentals so that I can at least project into the future, well, if this happens, this would occur. And that's not where Airbnb is right now. So I've paused and stayed away. All right, so that, I think, is all that I had on the plate today, and no questions, which is fine. But with that in mind, guys, I would say, with all that in mind, I would say that fantastic news on Rocket. If you are a Rocket shareholder, you look forward to that dividend, you might as well hang on now. Collect your extra $1 in there. I don't know what the ex-dividend date is going to be on that. If you're a Square investor, which I am at 214, I am looking for 214 or better at this point because I don't think Square wowed anybody. I do think Q2 is going to be better because tax refunds will circulate into the Cash App, and we saw that activity last year and what that did. We also likely will have a stimulus of some kind coming out, so that'll be great news for Square in the second quarter. But I'd be real picky about them right now on what shares you pick up. I would try to keep it close to 215, 220 because that valuation is very hot right now. And then otherwise, with the stock market crash, I think my 2 cents is, don't blow all your money right now thinking that this is it. I think we bleed out slower. Be careful with how you spend. Make sure you have enough saved up in case things get worse to buy the dip. I do think it'll be a short-term thing, but I do also think that what we're seeing today doesn't necessarily bode well for a bounce back, right? Because we're barely at January 25 prices. We need to get down a little bit further before you could start talking about these stocks bouncing back in a big way. They just haven't lost that much when you look over the historical timeline. All right, everybody, hope you enjoyed this quick live stream look at things. We will see you on the next one.